Everyone, this is Jay from Modern FI Mentor, and today I'm going to talk about the latest company that I've added to my portfolio called Nebius. It's an AI cloud company, and I know those are all the fanciest terms that get thrown around in tech, but don't worry, I'll simplify it for you what the company is doing, why I got in at this point, what is my thesis pointers, what can go wrong, go right. I'll kind of explain all of that to you in this video. So I'll just get started. So Nebius is a cloud AI company which provides you AI computing power, the GPUs and everything that's needed for your own purposes. And that too on a cloud basis, as in you can just pay for the amount that you're using and you do not have to permanently store these data centers. You do not have to have all the setup for yourself. Similar to what AWS has done for a lot of companies and the website hosting domain. Right. So they have all these clusters and everything that they have built in that you can, rent on a per usage basis. As you can see, like you can, take these for $3 per hour and everything, like the different models available from NVIDIA. And they're kind of working on they also I have this exemplary performance certificate from NVIDIA, which is also kind of really heartening to see because they that just kind of signifies and sorry, it just confirms the fact that uh, they are good at the execution that they do. So it's not just about winning contracts, they will also do well. So I'll just get started as here. I was using just ChatGPT and I can kind of simplify the business of Nebius for you. So it's divided into three segments. The first is the AI cloud, then is AVRED, and then there is Toloka. So this AI cloud, which is the main business, I would say the main bread and butter of the company. So basically, you can take or on rent their supercomputers, the GPUs from the data centers that they're building out. So, you can take them and scientists and, research labs and anybody else that might need this AI computing power can take them on rent and pay them back on a per usage basis. Right. So this is the main business. So approximately management has guided for about 900 to $1.1 billion of revenue by the end of 2025, which is kind of healthy to see. And I'll just come to the financials as well, just explaining the business first. Then they had this self-driving car lab, which was AV Ride. So they kind of rented the technology to Uber, Hyundai, and Grubhub. This is, I would say, a more a bet that if pays off well, but it's not something as an investor that I'm looking at. And I'll tell you why, because this is a small bet. If pays off, can actually do really well. But I already see there's a lot of competition and like I would say real world application that's already going on. Waymo is doing so well. Tesla is doing so well. So it feels like a very difficult part, as in like if this will take off very well. If it does, that's like uh, us getting a bonus, but definitely not what we're depending on. And finally, is their data workshop, which is also very small. Actually, Bezos has invested in this, and I think it will not be reported as part of their own revenues from now on. They do continue to have a stake in the business, though. So what they're doing is they're taking the data from a lot of sources. They're kind of cleaning it up so that AI companies, LLMs can take this data and work on it. And rest, then they have some investments, for example, ClickHouse. Also, I would say very minuscule. But the major game that is coming from is the AI cloud. That is where we're interested. Even Microsoft is interested. So they had a $19 billion deal with Microsoft as well that was announced recently, really pushed the stock into another atmosphere. And this proves that the execution capabilities are amazing. If someone as big as Microsoft is trusting such a young company to ease out pains of the scaling of AI, that definitely tells volumes as to how good the team is, how good their technical prowess is. Because getting as I was telling you here, getting approved by NVIDIA and then also getting contract like real hard cash from Microsoft, signing that deal definitely speaks a lot. And I'll just come to their financials. And as you can see, they've done quite well. So this is like a quarterly revenue view. So they've gone from like 5 million, 6 million, and they're now at 105 million, sorry. And I believe that when their next quarter results come out, which is probably the end of October or something like that, it'll be even better because the interest in Nebius is growing. So they are basically doing it well. They're focusing on the future growth. They're making the investments as needed. And that's why I believe the company uh, has that hyperscaler kind of potential here. So if I just take you, oh, sorry, my bad, that's just the balance sheet. Uh, Meanwhile, it loads. Yeah, yeah, as you can see, like the year-on-year growth has been in triple digits for some time now. Like the last 4 quarters have been triple digit growths. And I believe this growth will continue for some more time. If they're guiding for an annual revenue of around near 900 million to $1 billion, there's still quite a lot of room for the company to grow. And I believe the market participants have already kind of discounted that, which reflects in the stock price, which will just come to in the charts. But nonetheless, if you can see, their margins have also kind of been largely in the band that you would like to see them. Gross margins probably around 70% and operating margins currently negative. The operating leverage is at play. That's the game that we're playing for. If they kind of keep getting this growth in, their fixed costs will remain fixed and the revenue that they will get will flow directly into EBITDA. Right. Currently, you can see they did showed like approx, I think, $50 million in revenue. Just a second. Yeah. So that can happen, but the game here is like they keep on winning these contracts. Their order book keeps growing from these hyperscalers, Google, Microsoft, OpenAI, now even Grok. There are quite a lot of people that want this AI computing power, and I feel the company is well placed. Even just talking about the balance sheet just for a minute, what I really also love that they've kind of also worked on their debt level. So if you just see on their long-term debt, it's kind of gone down quite significantly, and the debt to EBITDA levels are also getting much more comfortable here. That's what you like to see as an investor. As the company is growing, they're expanding, and the new money that comes in, they're paying off debt. So that definitely will eventually help increase profits as well as increase the return on capital that is being put in. And but the one problem is you will not see all of those things today. So if you were to look at a ratio, they will all look bad as they're supposed to, since it's in still a very hyper growth stage, I would say, not even just a growth stage. And if I take you to the right, yeah. See, like definitely everything is negative. Return on equity showing 58%. I think that's not going to be that high. But if their margin sustain, their EBITDA margin sustain, which is in the band of 15 to 20%, what the management is guiding for, I think this is a solid bet that has already grown quite a bit and shows further potential, which is what we're really interested in as investors, right? So I'll just take you to the chart for a minute and I'll tell you why I bought it. So uh, if you can see here, what is happening is I've used the monthly charts, and what I've used is the V-stop indicator as well as the volumes here. And this is a monthly chart, and I'll just go to the weekly chart in a minute. But if you see the amount of volumes that are happening, this kind of volumes is nothing short of institutional buying. Like there's no way retail investors can pump in this much volume for the company. And as you can see, as soon as the stock volumes have gone up, the price has kind of gone into an atmosphere. We've gone from a low of around what, 15 to $20 to 130 or near about $130 today, which is amazing. And I'm not talking like a really, really long time, but the company has done well, and there's a reason why they're getting this kind of respect from the market. The market is discounting, they know what's happening. That being said, I'm a buyer at this level. I bought at around, I think, 130, 129. My allocation is pretty low for the reason that the valuations are sky high. A lot of the expectations are built into the stock price already. So that's why I'm a little cautious. I'll be happy to increase allocation if the company continues to get more projects, gets the revenue from those projects and converts them into hard cold profitable cash. But in the meanwhile, a lot of people have already benefited from this amazing bull run. But nonetheless, great work on this team. And I'm just being watchful. I'm using the V-stop metric. If it's below, it's on 1.5 because this is a very volatile bet for me. If things start to look down, I'll be happy to cut my position. But just amazed to see the kind of growth this company is doing, like and like what the potential is. So just really impressed. I'm looking forward keeping a good track as to what they're doing, and if this continues, like I would say, like amazing growth ahead. Like definitely, there's a lot of capex that's announced. Be more of the capex is being announced, not just by tech companies now, and Nebius is well placed to take advantage of all of that. So that's all for this video. Let me know if you are also a buyer of Nebius or not, and I'll see you soon with another update.